Greetings, madam. We are from Group 2, consisting of Ketisan, myself, Justin, Lingesh, Kavigesh, and Daniel. And today, we are going to present to you about the process of accounting as part of our assignment 2. The first part of the accounting process is the recording of a journal entry. According to accounting tools, a journal entry is a record of a business's transaction. It contains information regarding the transaction, such as its date and the amount debited and credited. A journal entry is important for a business because it assists them on tracking transactions performed. Apart from that, journal entries provide intelligence to business executives on a company's financial activities, which can be utilized for planning and strategizing. Here, I have a simple example on how a journal entry can be used. Let's say MSU Holdings made these following transactions. On 3 December, it purchased balloons for 260 ringgits for its convocation ceremony with cash. And on the next day, on 4 December, it received tuition fee payment from Andrew for 8,900 ringgits by check. Now, these two transactions are recorded in the journal entry, where its debit, credit, date, and amount are shown. As shown here, for the 3 December transaction, we can know that the transaction resulted in a debit with a total of 260 ringgits. Apart from that, there's also a credit in cash since the company used cash to buy the balloons. For the 4 December transactions, we can also see how the check is debited since Andrew paid his tuition fee to MSC Holdings through check, and how revenue is credited, which is essentially Andrew's tuition fee. On the very right, we can also see all the debit and credit for the 4th December transaction is 8,900 ringgits.
Greetings. My name is Kavigeshwaran Analakimanimaran. So today, my part of this presentation will be the ledger entries. First of all, I would like to dive into the definition of ledger entries. Ledger entries refers to the recording of financial transaction in the general ledger, which is the primary record used by a company to track all its financial activity. Each ledger entry consists of a debit and a credit, and it provides a detailed breakdown of the impact of each transaction on the company's financial account. Ledger entries have four components. The first one would be date. The date of the ledger entry indicates when the transaction occurred or is being recorded. This helps establish the timeline of financial events for accurate financial reporting and proper periodization. The second one would be details. Details in a ledger entry typically include account titles. These are the names of the specific accounts involved in the transaction. In double entry accounting, each transaction will involve at least two accounts, one that is debited and one that is credited. For example, a cash sale would involve cash, debit, and sales revenue, credit. The third one would be amount. The amount in each ledger entry reflects the monetary value of the transaction. It is split into two sides, debits and credits. Under the double entry system, every debit entry has a corresponding credit entry, and the total amount debited must equal the total amount credited. The last one would be references or transaction ID. A reference or transaction ID is unique identifier assigned to each transaction, often included in the ledger entry. This helps to trace the transaction back to its source document. For example, invoice, receipt, purchase order, or journal entry. It may also be used to link the entry to the journal in which transaction was initially recorded. So that's all for my part. Thank you.
Today I'm going to talk about trial balance. A trial balance is a financial report that lists the balance of all general ledger accounts at a specific point in time. It is used to verify that the total debit equal the total credits, ensuring that the accounting records are mathematically accurate and in balance. The trial balance is typically prepared at the end of an accounting period as a preliminary step before generating financial statements like the income statement and balance sheet. The trial balance includes both debit and credits entries for each account, and the sum of debits should equal the sum of credits. If they don't match, it indicates that there is an error somewhere in the accounting records that need to be identified and corrected. The primary purpose the primary purpose of a trial balance is to check for arithmetic errors. It ensures that the sum of debits and credit is equal, which helps identify any calculation mistake in the ledger. The second one, verify accounting accuracy. It acts as a tool to check the correctness of a journal entries and general ledger postings. The third, assist in financial reporting. It serves as the foundation for preparing accurate financial statement by verifying the balance of all accounts. Furthermore, we got detect errors key points, debits and credits, balance total, and the last but not least, does not guarantee accuracy. Thank you, everyone.
Hi, good morning. My name is Kedison Lucky Kajirawan. So today I am going to present about the accounting assignment 2. So as a my part, a statement of profit or loss. So I will explain about the statement of the profit or loss. So for the definition of the statement of the profit and loss, it will be the statement of profit or loss, also known as an income statement, is a fundamental financial document used to assess businesses' financial performance on a specific accounting period. It provides a detailed summary of the revenues, net expenses, expenses incurred, and the resulting profit or loss of the business. This statement is crucial for determining whether a business is financially viable, as it shows the ability to generate profit from its operating. The statement typically begins with the revenue, which represents the total income earned from sales of goods or services during the period. From this, the cost of goods sold is subtracted, which includes the direct of costs associated with the producing or purchasing the goods sold. The difference between revenue and cost of goods sold is the gross profit, reflecting the profitability of core operation before accounting for the other expenses. Next, the statement lists operating expenses, which are the costs incurred to run the base business. These expenses include items such as rent, salaries, utilities, and marketing, subtracting operating expenses from the gross profit results in the operating profit, also known as operating income. The figure indicates to the profit generated from the regular business activities. In addition to operating the activities, the statement includes other income and expenses such as interest earned, dividends received, and also interest paid on loans. These non-operating items are added or subtracted to determine the net profit or loss, which is the final figure on the statement. Net profit reflects the overall financial performance of the business. After accounting for all our revenues and expenses, the statement of profit loss is vital for stakeholders, including management, investors, and creditors, as it provides insight into the company ability to generate the profit. It aids in decision making, helps evaluate efficiently, and it also used it for tax reporting. Overall, this statement serves as a key tool in understanding the financial health and sustainability of business. The structure of the statement of profit loss are the revenue, cost of goods sold, gross profit, operating expenses, operating profit, other income and expenses like which I mentioned just now, and net profit or loss. That's all for my part. That's all for my part. Thank you.
Hi, Assalamualaikum. My name is Muhammad Daniel Mukris, and I'm going to present about accounting mind map. In accounting, there is 6 flow, which is include the accounting cycle, cash accounting, income statement, liability, asset, and financial statement. First one is accounting cycle. What is accounting cycle? Accounting cycle is a business owner collect financial information, generates it, post it to the ledger, prepare financial statement, and more. The next one is cash accounting. Cash accounting mean a company incur expenses but doesn't recognize revenue until it receives cash from a customer. The next one is income statement. In income statement, a public company income statement is an example of financial accounting. The next one is liability. Liability means liability are debt or obligation a person or company owe to someone else. The next one is asset. Asset is personal. Asset can include a home, land, financial securities, jewelry, artwork, gold and silver, or your checking account. The last one is financial statement. What is financial statement? Financial statement are a set of documents that show your company financial status at a specific point in time. So that's what in accounting mind map that I present. That's it, accounting flow. That's all from me. Thank you. Assalamualaikum.